Okay, want to show is the property over the past 10 years, meaning 2016 until last year, is able to hedge against the inflation in Malaysia. So take a look on the total property price and then compare to the GDP growth in Malaysia over the same period and the inflation factors. Then we do a comparison. So now take a look on the chart here. So this is the total property transaction value for past 10 years. The latest one we have is last year. This year haven't finished yet. So it increased 66.3% in terms of the value. So I'm using the value to do lah, not the transaction volume. So let's say the property price is 100,000 and the transaction value will be 166,000 after 10 years. And take a look on the GDP for the same period. I'm using the nominal value to do the comparison. The nominal value basically is the current price without the adjustment of inflation. And this is exactly why we use a nominal. So we're able to compare apple to apple the price of property over the same period of time. So to see whether the property uh, total value is in tandem growth with the GDP. So let's say the GDP growth at, in this case, 62%, but just use a example, the property growth at 50%. So meaning we can roughly give an idea the property market as a whole did not perform as good as the overall GDP in Malaysia.
GDP at nominal prices measures the total value of all goods and services produced in a country using the actual prices of that year, without adjusting for inflation.
So we backtrack a bit. So total transaction property is 66. So GDP is 62. So it's in tandem and slightly outperform the GDP. So the main question is the property a good hedge against the inflation? And to look at it, we need, of course, the inflation rate numbers. So this is the general CPI tracked by Department of Statistics Malaysia, DOSM. DOSM. You can go to their website and they actually produce quite a lot of regular update on all kind of statistics. Quite interesting. And the index growth over the 10 years is here. Put it simply, accumulation inflation over these 10 years is 17 to 18%. Meaning that if let's say a product, for example, a cup 10 years ago, 10 ringgit, then last year it cost about 11 ringgit, 80 cents. So usually the CPI, they track using a basket of goods whereby the Department of Statistics will categorize as, for example, food, and then they put a weighting in general Malaysia how they spend. Let's say food is a big item, so they will put a weighting of, for example, 30% will be food. Then within the food, they will have fish, vegetable, chicken, and then other category like accommodation. They will further subcategorize in smaller groups and things like that. And the reason I'm not going to use a CPI to do is personally, I think there is a much better indicator to use. And another one drawback for CPI is 18% over 10 years. I don't think so. So I think inflation is much higher than that. Personally, I think. So this is another definition of inflation. Basically, in modern economy today, a lot of textbook that we study is using the demand pool theory. Demand higher, supply lower, price increase, or vice versa. Demand lower, supply higher, cannot sell, I drop the price, then generally the price drop. Another one is called cost push, meaning like for example this cup again, the cost for producing this particular cup, let's say need labors, build material and the machinery, then whatever the cost factors increase, it will end up the price is higher. So these two is what we normally use as a economics definition nowadays. But I prefer the old one. The old one, this one extract by Federal Reserve 1997 from Cleveland, US. It basically means too much money is an increase of money stock that is accompanied by the rise of general price. In other words, is the more money supply you have circulating in the market, the higher price all general goods will be reflected, and in a lot of cases it will be quite direct.
M2 money supply is the total amount of money circulating in the economy, including cash, current accounts, savings deposits, and fixed deposits that can easily be turned into cash.
So that's the reason I use money supply M2. There are three types of money supply. So putting simple, one meaning narrow, three is the broadest. The M2, it should be sufficient because it will include the paper money, loan, deposit of all kinds. So they will be sufficient. And Bank Negara actually track this number every month. So the latest we have is May. Okay, money supply increased by 58% over 10 years. So meaning that circulating money, let's say 100 ringgit in 2016, let's say 100. Last year, the circulating money will become 158. So this is what it means in very broad terms. Okay, I do a table of comparison. So the verdict is here. The indicator that I just now mentioned, M2 supply. So look at this 5.23. This is average yearly growth over the 10 years. So meaning, let's say first year, the money supply is 100. Second year will be 105.23. Then on the third year, you will use a second year number, which is 105.23 times the same rate. So it will like a compound interest rate, in other words. So first thing we look at the GDP 5.5. So compared to this one, so GDP ahead of the money supply growth. Good news, meaning that every ringgit that our money growth in Malaysia, it will produce higher than the 1 ringgit value. So it's a good sign. Lower than one will be not so good, not so efficient of the money. Then the total property transaction value growth by 5.82, so quite ahead of it. And transaction value of residential 5.75, commercial 5.6. So all the four indicator here is ahead of the money supply growth. So meaning that these four sectors are actually two, GDP and property. So I divide to residential and commercial. Actually, I try to find more subsectors, but I couldn't find yet from NetPeak. This only the two figure I can get and the total one. So to put things simple, so the right hand side is the M2 that I mentioned just now. So all is above this rate. And hopefully with this kind of comparison, it will give you another tool to use to analyze whether a certain property or not even property sectors, whether it can outperform the money M2 or M3 if you want to use M3, and whether it's underperformed. And this is quite useful, I think. Hopefully it can be helpful to you. Thank you.